Herkese merhaba. Küresel piyasalar için kritik bir haftadayız. Bu cuma Japonya Merkez Bankası toplanıyor ve 2 günlük toplantının sonunda kararını açıklayacak. Bu alacağı karar sadece Tokyo'daki yatırımcıları değil, Türkiye'yi de yakından ilgilendiriyor. Japonya geçen yıl uzun aradan sonra ilk kez faiz artışına gitmişti. Ama bu seferki karar daha önemli çünkü artık piyasalar ilk adım atıldı mı sorusunu geçti, bu yön kalıcı mı sorusuna yanıt arıyor. İşte bu yüzden bugün Japonya'daki bu dönüşümün Türkiye ekseninde gelişen ülkelere ne anlama geldiğini konuşacağız. Konuğumuz S&P Global Gelişen Piyasalar Baş Ekonomisti Elijah Oliveros-Rosen. Welcome to CNBC, Elijah. It's great to have you with us.
Thank you for having me. Happy to be here.
Elijah, let's start very simply for our viewers. There is a critical meeting in Japan this Friday. Why is this meeting so important?
Thank you for the question. So, to put things in context, it's been a very good year for financial conditions for emerging markets. We've had record levels of debt issuance. We had more upgrades and downgrades in terms of sovereign ratings in the emerging markets. Credit spreads are at record lows. So obviously, the Bank of Japan being one of the largest central banks in the world, monetary policy there could influence financial conditions for EMs. Now, in our view, and I think this is the view of the market, the BOJ will most likely increase its policy rate by 25 basis points. But what matters really is not what they do this week, is the guidance that they provide for the future. We think that the BOJ will remain very cautious on its pace of monetary policy normalization. And if this is the case, which is already priced in the markets, it shouldn't impact financial conditions to a great extent.
Yes, you're right. And you're saying decisions made in Japan can have an impact thousands of miles away. According to Trade and Economics, several currencies stand out, including, the Turkish lira, the Russian ruble, the Brazilian real, and the Argentina peso. How might a potential interest rate hike affect emerging economies that offer high interest rates, such as Turkey?
Right. So I want to make a distinction here between an interest rate hike and what the market already prices in, because if it's an interest rate hike that's already priced by the market, we shouldn't see a big impact on this sort of FX dynamics. And that's where we are right now, right? Again, the market is pricing in one rate hike this week and then one, maybe two next year, a very gradual pace of hiking. So that's why we're paying a lot of attention on the guidance that the BOJ provides on Friday. Because if it differs from what the market is pricing, then we could see some movement. But if it's in line with what the market is already pricing, we should not see too much of an impact on exchange rate dynamics of the Japanese yen against, EMFX. But as you rightly point out, some of the big sort of currencies that benefited from this carry trade were, the Brazilian real, the Mexican peso, the Hungarian forint, the Turkish lira, which if you look at total carry returns, we're in the orders of magnitude of 20% in 2025.
Right. Let me focus specifically on Turkey, Elijah. Turkey currently has one of the highest interest rates in the world. How could Turkey be affected if the Bank of Japan raises interest rates this Friday?
So, you're right. Turkish has a, high rate, both in nominal terms and in real terms. And, the BOJ, again, as long as they do what the market is already pricing in, it will not have an impact. However, if they're more aggressive in sort of the forward guidance that they provide to the market for future years, Turkish could react in the same manner that other emerging market currencies will react, which is potentially weakening if we see signals that are more hawkish than expected.
I see. Let me build on that. Looking ahead to the new year, how do you see foreign investor inflows into Turkish financial markets evolving? And how might these potential inflows or outflows affect the exchange rate?
Yeah, so let me talk about the framework, the macro framework that the Turkish economy is going through. And it's really two parts plus one. So the two parts being tight monetary policy, tight fiscal policy, and then the plus part is low oil prices. If you put these three things together, we're seeing inflation heading lower, right? So that's good for foreign investors. Inflation went from the 40s at the beginning of 2025 to the 30s now at the end of 2025, and it's likely to head to the 20s next year. And that sort of provides an anchor to expectations on the Turkish economy. We expect real rates to remain high. And again, this is an important part of the framework. And so the Turkish central bank will only cut rates as inflation sort of slows down next year, which is what we expect. So generally, a relatively stable environment. But again, there's obviously risks on both sides.
Yes, that's it. Let me take a step back. How do you position Turkey among emerging markets in 2025-2026 period? What are the key risks and opportunities that differentiate Turkey from comparable emerging economies?
Yeah, I mean, I put Turkey somewhere in between Latin America, economies that grow, 2%, and emerging markets in Asia, where growth is, 4 or 5%. So we have the Turkish economy growing, going from the mid threes in terms of GDP growth this year to the low threes next year. Again, a relatively stable environment. Obviously, external conditions matter a lot for Turkey. So, one risk that we're watching is not only what the BOJ does in terms of what we already discussed, but what the Fed does will be important for exchange rate dynamics, for appetite for riskier EMs. So, I think there's a lot of things to monitor on the external front.
And final question. You said that S&P raised Turkey's rating from B plus to BB minus at 2024. S&P has not yet announced a rating schedule for Turkey. When do you expect this schedule to be announced? And how do you assess Turkey's current position and potential in terms of its credit ratings?
Well, I can't talk about, specific dates on announcements that haven't been made. This is not something I am aware. I can just tell you that, our rating for Turkey on the sovereign is double B minus with a stable outlook. And we discussed some of the dynamics behind that. And it's this macro framework that I've discussed where they've, kept rates on the real side, on the positive side, inflation continuing to head lower, and fiscal remaining relatively tight. So that's what I can tell you about it.
Thank you for sharing your insights with us, Elijah.
Thank you for having me.